Ever wonder how billionaires pay less in taxes than most people? It's not a loophole, it's strategy. From smart investing to tax shelters, the truth might shock you. Before we dive in, don't forget to like this video and subscribe for more financial insights. Now, let's uncover how the ultra-wealthy legally pay less in taxes than you. 1. They earn through assets, not regular income. The biggest difference between how billionaires and regular people earn money lies in the source. Most people earn wages or salaries from a job classified as earned income, which is taxed at the highest rates. Billionaires, on the other hand, earn most of their wealth from investments like stocks, real estate, and businesses. These are considered capital assets, and when they grow in value, the profit is taxed as capital gains, which usually has a much lower tax rate than earned income. In the US, the highest federal income tax rate can reach up to 37%, while long-term capital gains max out at 20%, often less if they're structured strategically. 2. They use borrowing instead of selling to avoid taxes. Here's a loophole that sounds almost like financial magic. Instead of selling their assets and triggering taxes, billionaires borrow money against them. This strategy is called buy, borrow, die. They buy appreciating assets, borrow against them using those assets as collateral, and live off the borrowed money, often tax-free. Since loans aren't considered taxable income, they can access millions without paying a cent in income tax. This borrowed money can be used to fund a lavish lifestyle, invest in more businesses, or purchase even more assets. All the while, their net worth continues to grow, untouched by the IRS. This isn't an illegal trick, it's a feature of the financial system. 3. They take advantage of capital gains and dividends. Billionaires are experts at structuring their wealth to generate passive income through capital gains and qualified dividends, both of which are taxed at significantly lower rates than regular income. A qualified dividend from a stock, for example, might only be taxed at 15% or less depending on your income level. Meanwhile, a middle-class worker could be taxed up to 30% or more on their paycheck when federal, state, and payroll taxes are combined. Many billionaires ensure that their personal income comes from these types of sources. Even when they technically earn millions, it's from financial instruments taxed at reduced rates. 4. They build wealth inside trusts and foundations. One of the more complex but powerful tools billionaires use is a network of trusts and private foundations to protect and control their wealth across generations. Trusts allow them to shift assets out of their personal name and into protected legal entities, often reducing estate taxes and income taxes in the process. By putting wealth into irrevocable trusts, they can shield it from taxes while still controlling how it's used. Some even use charitable trusts to make donations while securing tax deductions and passing on wealth to heirs. Private foundations are another key weapon. 5. They write off expenses that would be personal for you. For most people, buying a car, traveling, or having lunch is a personal expense, plain and simple. For billionaires, it can often be a business expense, which makes it tax deductible. If a billionaire owns a company, and that company pays for the car, the plane, or even the home office, they can deduct those costs as business expenses. They may take business meetings on yachts, call vacations networking trips, or write off luxury real estate used to host company events. If structured correctly, these deductions are legal and substantial. 6. They pass on wealth without triggering major estate taxes. When average people pass away with significant assets, estate taxes can take a hefty cut before their heirs see a dime. But billionaires use sophisticated tools like grantor retained annuity trusts, family limited partnerships, and step-up basis loopholes to minimize or entirely avoid estate taxes. One of the most powerful advantages is the step-up in basis rule. When someone inherits an asset like a stock or property, the value of that asset is stepped up to its current market price, effectively erasing any capital gains taxes that would have been due if it were sold. That means billions in unrealized gains can transfer tax-free to heirs. 7. They use losses to offset gains through tax harvesting. Tax loss harvesting is a smart strategy where investors sell assets at a loss to offset gains in other areas, reducing their overall taxable income. Billionaires use this strategy aggressively, often with the help of tax professionals who monitor their portfolios constantly. Even when the market drops, it's an opportunity to save on taxes. They sell losing assets, lock in the tax benefit, and often reinvest in similar positions shortly after. This allows them to maintain their investment exposure while still harvesting tax breaks. In business, they do something similar, showing a loss on paper through depreciation or operational costs while still generating massive cash flow. 8. They get paid in equity, not salaries. Instead of collecting big salaries that are taxed at high rates, billionaires often compensate themselves in equity stock, ownership, or shares in the companies they create. This has two major benefits. First, equity grows in value without triggering taxes until it's sold, and second, it creates leverage for loans or business expansion. This strategy turns their companies into tax shelters and engines of wealth. Even if they want access to cash, they don't have to sell their shares. They just borrow against them, live tax-free, and let the value compound. This is the single most powerful advantage billionaires use, and it's completely legal. 9. They influence tax laws through lobbying and donations. It's no coincidence that the tax system seems to benefit the ultra-wealthy. Many of them help shape it. Through political donations, lobbying, and funding think tanks, billionaires exert massive influence over how tax laws are written. In some cases, they even help write the language that becomes legislation. This gives them the power to ensure loopholes remain open, rates stay low for capital gains, and enforcement remains weak for complicated financial structures. While most citizens rely on public representatives, billionaires fund campaigns and back candidates who align with their economic interests. It's not just about avoiding taxes now, it's about protecting the system that keeps their taxes low in the future. 10. The system is designed to reward capital, not labor. At the heart of this entire strategy lies a systemic truth. The modern tax code is designed to reward people who make money from capital, not from working a job. This means billionaires who earn money through investments, stocks, and ownership are taxed far less than teachers, nurses, or construction workers who trade hours for pay. It's not a glitch, it's by design. Wealth creates more wealth, and the laws protect that cycle. Until the system is reformed to tax capital more fairly or close some of the most egregious loopholes, the divide will continue to grow. This is why some billionaires publicly say they should be taxed more even, while privately continuing to use every strategy available to pay as little as possible. They understand the game, and they know how to play it better than anyone else. The system isn't broken, it's working exactly how it was built. Just not for everyone. It's not about cheating, it's about knowing the rules. Which strategy surprised you most? Share in the comments. And if you found this eye-opening, be sure to like and subscribe for more financial secrets, tax tips, and wealth-building content. Stay tuned for more ways to play the money game like the pros do.